is what corrected big time yesterday was Muthoot Capital. The profitability has taken a hit in the March quarter. To understand the factors that led to this decline, Shefali Malik had a chat with the CFO Vinod Panikkar. Listen in.
Thanks for having me on the show. I would just want to emphasize on one important point when we are talking about the earnings or more so about the profitability of this current quarter. This current quarter, maybe to begin with, I need to say that we did a securitization of about 366 odd crores. As per the RBI regulations, we are permitted to recognize the income on securitization transaction only when we receive the money physically from the SPV. Now, in our case, there was an income of roughly 7.02 crores, which was relating to this 366 crores, which was not accounted by us in the current quarter, because as per the RBI regulations, you need to defer it to the actual receipt of money or receipt of funds from the SPV. That's the reason this was not accounted in the current quarter. And this is the single largest reason for the income being lower, which obviously led to the bottom line being lower. Number one. Number two is the fact that March quarter is a quarter when there are a lot of bank renewals and other things happened. And there were a couple of large bank sanctions which came through. One of them was in the form of a term loan. We spent about 2.7 crores on bank processing fee as payouts. And then I did mention about the securitization transaction. So there was a cost of roughly about 1.4 crores. Now these two are one-time cost or once in a year. The first one is once in a year kind of cost. This is the securitization cost is a one-time cost in the life of the securitization. So these two hits were there. Apart from that, we in spite of all this happening, we took an additional 4 crores additional provisioning on the NPAs, just to ensure that our coverage goes up from 43% that was there in the last quarter to 45.3% in the current quarter. All this led to the overall profit looking lower at about 18.3 versus about 23.3 in the immediately preceding quarter.
Sir, you said that you've made extra provisioning this time around because of for some NPA accounts. Could you tell us more about these NPA accounts and about your asset quality? Because I can see that in Q3 your gross NPAs were about 5.5% and net NPAs about 4%. So how did the asset quality pan out this time around?
On an absolute number basis, the NPA last time was about 122 crores. End of Q4, it was at about 113 crores. In percentage terms, 113 crores on an overall portfolio of about 2,741 crores, that looks to be at about 4.3%. If you look at the provision of the NPA, I mean, if you look at the NPA as a percentage of the book AUM, it is at about 5.3%. The net NPA on the on-book NPA or on the on-book NPA was at about 3.1%. If I look at the overall NPA book, which is including the book, the managed portfolio, because we do securitization, we have got managed portfolio of 656 crores at the end of the year. Including that, if one looks at it, the net NPA is at about 2.3%, gross at 4.3%. So I would say the portfolio in absolute terms, since the NPA numbers have gone down, the asset quality has been good or better than the last quarter.
So, Mr. Panikkar, how was the business momentum this time around? What kind of disbursements did you have in the quarter? And at the end of Q4, where do the AUM stand at?
During the quarter, we had a disbursement of 605 crores versus 502 crores that we did in the immediately preceding quarter. Versus comparing with the same quarter last year, the growth was only 2%, but versus the immediately preceding quarter, the growth was at about 21%. This led to the overall loan book going to about 2,741 crores. We started the year at about 2,238 crores. So the overall the growth has been at about 22% on a full year basis.
Sure, sir. What about the margins? Because it has been a tough quarter and, in fact, challenging time for NBFCs and financial companies on the whole. So, did your cost of funds go up in the quarter, and were you able to maintain the margins?
We were able to maintain the margins mainly because we had increased the price to the final consumer a little bit in the range of about 50 to 75 bips sometime in the month of December. Our cost did go up in the current quarter. In fact, current quarter versus the last quarter, there was a 40 bips increase. We were at about 9.7%. Last quarter, it has gone up to about 10.1% in the current quarter.
So one concerning point for NBFCs has been the asset liability position. So where do you stand at currently, and what kind of repayments do you have coming up in, let's say, next 6 months or so?
Most of our funding is either it's bank funds. Let us say roughly, apart from the securitization that we do, which is roughly 29% of my total borrowing book, the 64% or 65% is bank funds, which is in the form of CC, WCDL, and term loans. The CC and WCDL, while they come up for payment, it's more of a rollover in the sense that it comes back to me the next day, or in many cases the same day. So while there are payouts which will be there on a month-on-month basis, it's not a payout which is gone forever. It's only the term loans which we pay out, which goes forever, which would be in the range of 20 to 25 crores a month, not in any way big amount.
Okay, so sir, you are into two-wheeler loans, and you've also entered into the used car segment. So auto sector has been witnessing a slowdown. So as a lender, what is it that you have been witnessing?
We have seen some bit of slowdown in the two-wheeler segment in the last 2 to 3 months. But the way we would want to tell our investors is we feel that no, this is a temporary phase. Number one. Number two is we are today present in about let us say 20 states, of which it's only in the southern states, and that too in Kerala, that we are fully entrenched. Rest of South, we are reasonably entrenched, but then there's a lot more that we can do. And the other 3 zones, West, East, and North, we have just scratched the surface as of now. There's a lot more that we can do, and that is what will drive our volumes. In fact, we are fairly confident we should easily do double of what the market grows by. The say in the industry is the market should go up by 5-6%. We say that no, if that is the case, our position, our volume should increase by at least double of that.
All right, so one last question. Leave us with an outlook for FY20.
Ma'am, last year or FY18, when we did a QIP, we had committed to the investors, QIP investors, that we would double our book from that day onwards. From that day to the end of FY20, that's March 20. We were at about 1,700 crores that time. So we had said that we will do about 3,500 crores. We are fairly confident that we should reach that number by the end of the current financial year.
With that, it's a wrap on this leg of Indian Open. Up next is the FNO Show. Thanks so much for watching.